Good evening and welcome to Front Page on the AIM Network, India's definitive media organization and voice on everything AI and technology. Tonight's stories are true game changers, from a mega collaboration to very deep introspection. Here are the headlines. In a historic shift, Apple officially partners with Google to power the next generation Siri with Gemini models. The multi-year deal signals the end of Apple's vertical AI isolation and cements Google's infrastructure dominance. Mark Zuckerberg launches Meta Compute to monopolize global energy for AI, prioritizing raw infrastructure scale over research, just as AI godfather Yann LeCun resigns to build a rival €3.5 billion startup. ISRO's trusted workhorse suffers a second consecutive third-stage failure, destroying 16 satellites, including strategic defense assets. The repeat anomaly triggers urgent quality control reviews, whilst resilient startups pledge to rebuild immediately. And finally, SpaceX, OpenAI and Anthropic lead a historic return to public markets, targeting $3 trillion in new value as 2026 becomes the launchpad for financing civilization-scale technology infrastructure. Good evening. This week, Apple did something it almost never does, which is ask for help. Google's Gemini will now power the next generation of Siri. Apple still builds the hardware, the polish, the ecosystem. But the intelligence running it, that's Google's domain from now onwards. For months, we've called this an AI Cold War right here on Front Page. Turns out, it ended the way most wars do, with a deal. This Front Page by AIM Network. Let's of course go ahead and decode why the most valuable real estate in your pocket just became a Google colony. First of all, we need to of course silence the rumor mill. Just to be clear, there won't be a Gemini app coming to your iPhone, and Siri will not answer to, "Hey Google." No, that won't be happening. Because what has happened is far more interesting and consequential. Apple and Google have signed a long-term collaboration, and it shows its presence on the thinking layer of Siri. Here's of course a great way to understand that. Apple still controls the basics. Our data stays on the device, private cloud compute stays Apple run, privacy rules don't change because, well, we all know about Apple's stance when it comes to privacy. But when Siri has to really think, when the question gets complex, when reasoning matters, the intelligence required to address this is where Gemini will showcase its presence. A quick example to well clarify. We can of course think of it like a laptop. Apple builds the chassis, but this development is an Intel inside moment for AI, except it is Gemini inside. You might wonder why Tim Cook did this. Because Apple spent 2 years in the lab. They looked at their own models. They looked at GPT 4.0. They looked at Gemini 2. And of course, the feedback on Apple's internal tech was polite. Safe? Yes. Smart enough to win? A clear no, but politely. Which compelled Apple to break its golden rule. We know that usually they build everything. They own the silicon, they own the software. But not this time. What they did was they went shopping. They tested Anthropic, flirted with Perplexity, examined Mistral, and after all of that, they chose their biggest rival. Let us be clear. It is far from a love story. Ladies and gentlemen, it is actually an arranged marriage between $2 trillion families who need each other to well survive the next decade.
Google's stock steadily rises, surpassing Apple to secure the position as the second most valued company.
Google has the distribution. Gemini is already in 3 billion Android devices.
Google's stock steadily rises, surpassing Apple steadily rises, surpassing Apple to secure the position as the second most valued company.
That's definitely massive. A year ago,
Google's stock steadily rises, surpassing Apple, surpassing Apple steadily rises, surpassing Apple to secure the position as the second most valued company.
The chips, the TPUs, Google has the cloud and
Google's stock steadily rises, surpassing Apple, steadily rises, surpassing Apple to secure the most valued company, second most valued company.
Anymore. So if you're wondering what I am right now,
Google's stock steadily rises, surpassing Apple steadily rises, surpassing Apple to secure the most valued company.
Yeah, remember that one? That, by the way,
Google's stock steadily rises, surpassing Apple steadily rises, surpassing Apple stock steadily rises as the surpassing Apple to secure the position as the second most valued company. Google's stock steadily rises, surpassing Apple steadily rises, surpassing Apple to secure the position as Google's stock steadily rises. Surpassing Apple steadily rises, surpassing Apple most valued stock steadily rises, surpassing Apple steadily rises, surpassing Apple most valued position as the second most valued company. Google's stock steadily rises, surpassing Apple to secure the Google's stock steadily rises, valued surpassing Apple steadily rises, surpassing Apple most valued position as the second most valued company.
In the next 12 months, Siri might actually
Google's stock steadily rises. Google surpassing steadily rises. The position steadily rises. Surpassing Apple most valued position as the second most valued company.
The itinerary. Just in one
Google's stock steadily rises, surpassing Apple steadily rises position as the second most valued position as the second most valued company.
And thanks to this deal, that agent is powered
Google's
by Google,
stock steadily rises. Google's surpassing steadily rises, surpassing Apple most valued position as the second most valued stock steadily rises, surpassing Apple to secure the position as the second most valued steadily rises. Surpassing Apple steadily rises position, surpassing Apple secure the surpassing Apple second most valued company, second most valued company.
Definitely sharpening their knives. We know
Google's stock steadily rises, surpassing Apple steadily rises position, surpassing Apple most valued Google's stock steadily rises most valued, surpassing Apple to secure the position as the second most valued company. Google's stock steadily rises, surpassing Apple steadily rises to secure the position as most valued company. Second most valued stock steadily rises, surpassing Apple to secure the position as the second most valued rises, surpassing Apple steadily rises position, surpassing Apple to secure the position as the second most valued company. Google's stock steadily rises, surpassing Apple to secure the position as the second surpassing Apple steadily rises position, surpassing Apple most valued company. Google's stock steadily rises, surpassing Apple to secure the position as the second most valued company. Google's stock steadily surpassing Apple, surpassing Apple steadily rises, surpassing Apple to secure the.
We are about to live in a world where our iPhone thinks like a pixel, even if the logo on the back never really changes. Please do let us know in the comments below. Are we fine with Google running our iPhone's brain, or was made by Apple the only reason you bought it in the first place? Like, share, subscribe, and always remember, think AI, think AIM. Good evening. Meta has just declared war, not on TikTok, not on Twitter, but on the power grid itself. Mark Zuckerberg is done playing games with avatars. Mark just unveiled Meta Compute, which looks like a new command center. The goal? Build more AI infrastructure than any entity in human history. And you know what? We are talking about gigawatts, not chips. Tens of gigawatts this decade, hundreds later, which translates to the electricity consumption of maybe a small European nation which is dedicated solely to one company's brain. This is the narrative shift, which makes Meta no longer a social media company, but an energy company that happens to sell ads. Mark Zuckerberg has just hired exemplary talent, which tells us a lot and more. On the one side, we have Santosh Janardhan, the builder, the guy running the silicon, can also be actually referred to as the hardware king. Then on the other side is Daniel Gross, the strategist, co-founder of Safe Superintelligence, the visionary. But here is where things get very exciting. Enter Dina Powell McCormick, former advisor to Donald Trump. Yes, she is there for sovereign partnerships. The translation to that? Meta is cutting deals with governments. They are building compute for nation states, financing nuclear reactors, which makes it the ping pong game of power. Because tech needs energy and the government, yes, controls energy. Meta is trying to become the middleman, the broker. And the numbers are mind-boggling. $72 billion in capital spending for 2025 alone. They signed 20-year nuclear deals with Vistra and Constellation. And of course are backing next-gen reactors with TerraPower and Oklo. Meta wants a Prometheus supercluster consuming 6.6 gigawatts by 2035. But Zuckerberg says that that's still not enough. Actually, he wants maybe 10 times that amount, maybe even 50 times. Why? Because Llama 4 was weak. The reception was lukewarm. Meta lost the vibes war to OpenAI. So they are in no mood to let that happen again. And what they are actually betting on is that in the future, the best model doesn't win. The biggest battery wins, which has made this into not model versus model, but megawatt versus megawatt. Infrastructure, Zuckerberg says, is our strategic advantage, end quote. It's a thumping attack on intelligence. But as all wars, there is unfortunately a casualty in this one as well. As Zuckerberg buys nuclear plants, the soul of Meta's AI is unfortunately walking out the door. Yann LeCun, yes, the godfather of AI, he is leaving. He's raising 500 million euros for a new startup, the valuation for which 3.5 billion euros, before launch of course. And in conclusion, the front page take. Meta reorganized, they built a superintelligence lab under Alexander Wang because they want products, chatbots and speed, while LeCun refused because he doesn't believe in the LLM hype. He wants advanced machine intelligence, world models, reasoning, the real science fiction kind of stuff. Which means Meta chose the nuclear reactors while LeCun chose science. So one is betting on scale and the other is betting on the brains. Which brings us to the question for you. Who wins the future? The company with the most electricity or the scientists with the better idea? Let us know in the comments below. This is Front Page by AIM Network. Like, share, subscribe, and yes, you know what to do. Think AI, think AIM. Good evening. PSLV C-62, the flight that was supposed to be routine, heartbreakingly, it failed. 16 satellites lost. No longer can this be called a bad day at the office. It requires, honestly, a much closer examination and maybe even a change in the long-drawn narrative that we all have heard, which is, for decades, the story was simple. ISRO is the budget king, the reliable workhorse. But here is the post-mortem. The liftoff was flawless. The first stage, textbook, smoothly transitioning to the second stage, which was perfect as well. But then came the third stage, the liquid stage. And just like that, pure chaos. ISRO reported an anomaly, a disturbance in roll rates. And to understand this better, let's just think of it like a car spinning out of control on a highway. Now, based on that imagery, the rocket deviated, the trajectory broke, and the fourth stage never even got a chance to ignite. But here is the reason why the engineers at Sriharikota are sweating tonight. This has unfortunately happened before. PSLV C-61. Last year, it was the same stage and sadly the same anomaly. 2 missions, 2 identical failures, which makes all of us ponder that for a rocket with 60 plus launches and a gold standard reputation, this is statistically rare. But you know what? Statistically rare cannot calm the clients who have just lost millions. And this loss is pointing towards a quality control crisis. I would like to, of course, draw your attention to what has been lost. Apart from metal and circuits, we have lost eyes in the sky. EOS-01, which is India's spy class asset, hypersectoral imaging, border monitoring, military surveillance designed to give our armed forces real-time dominance. Now, it floats as space debris. And it's not just us. The United Kingdom, France, Nepal, Spain, Brazil, they all had bought a ticket on the Indian Express. Reputation, as we know, is everything. And this loss has been a devastating blow for ISRO's reputation. The real story, well, is the human story, to be honest. The startups, the dreamers who put their entire operational budget on top of a rocket. Take me to space. They had MOI-1 on board, India's first orbital data center concept. Bold? Absolutely. Risky? Yeah. And now, it's gone. But Ronak Kumar Samantre, yes, the co-founder of Take Me to Space, his response did not carry any panic or blame. He said, a small hiccup in our journey, but we have miles to go before we take a pause, end quote. And they're, of course, already rebuilding. 2-month turnaround, same mission, upgraded form factor, showcasing sheer grit. Then, of course, there is Dhruva Space, the veterans, the pros. They lost their payload too, but their move, they shifted customers back to sandbox mode, reminding the world that space is hard, independence is high, leveraging their full stack capabilities to calm the market. With the message, we will rebuild, we will relaunch, highlighting the maturity of the Indian private sector. So where do we go from here? The critics will be ruthless. The stock markets might be shaky. But to understand this better, let us step back and focus on what Chaitanya Giri at ORF reminds us. The PSLV legacy is 60 missions deep. The foundation is definitely solid, but the cracks in the third stage are very real. There is no doubt that ISRO has to go back to the drawing board, re-audit the manufacturing, revalidate the engines, recheck the telemetry. Because the future of India's space economy, from defense giants to garage setups, depends on one thing, which is predictability. India built its reputation by learning from failure faster than anyone else. This moment is brutally painful. It's expensive, but it is necessary. For the startups who watch their dreams burn up in the atmosphere today, your hardware didn't make it into orbit, but your ambitions definitely did. And here at Front Page, we are rooting for the rebuild. And honestly, we are rooting for it with a lot of pride and a lot of gusto. This is Front Page by AIM Network, wishing everyone all of the best. Think AI, think AIM. Good evening. 2026 is shaping up to be the most consequential year for public markets in over a decade. We are staring at a massive divergence. On one side, we have a historic wave of potential mega IPOs, SpaceX, OpenAI, Databricks, looking to fund civilization-scale infrastructure which has the potential to swell up to $3 trillion. On the other, giants like Stripe and Revolut are staying well private, proving that private markets are now deep enough to sustain multi-billion-dollar companies indefinitely. And of course, to help us decode this great capital divide, we are joined by the very experienced Ramesh Pudukode, with of course 37 years of experience bridging deep technology with financial insight. There is of course no better guide for this conversation. Ramesh, welcome back to Front Page. A pleasure as always to have you with us. Hi Ramesh, can you hear me?
Hello?
Hi Ramesh, can you hear me?
Yeah, I can hear you. How about you?
Wonderful. Pleasure to have you with us. Yes, I can hear you loud and clear, and I'm very, very excited to get into the conversation right away. So let's start. First and foremost, how do we first make sense for all of us, Ramesh, and the viewers right now? Please set the context. How do we make sense of this split, first and foremost?
You're talking about the private capital versus the public
Correct. Yes,
market.
yes, yes.
Um, as we know that as we heard about three companies, the three big stars, OpenAI, SpaceX, and Anthropic are planning to go public.
Hmm.
But it is not necessarily for the capital, but I think they want like the branding also because they are already getting a lot of capital from the private markets, especially like OpenAI from Microsoft and all the other companies and even Anthropic. SpaceX,
Hmm.
of course, there is no dearth of capital. They keep raising capital at the private level, but I think it's
Hmm.
more branding and
Okay.
as you mentioned, I think the private capital depth is also pretty deep nowadays. Like it's pretty strong, wide, diverse and strong across the venture capital, private debt, private equity capital, all those things. It's about 24, $28 trillion now, the private
Yeah,
capital.
I mean, and that's quite interesting, Ramesh. That private capital can sustain multi-billion-dollar companies, as I just mentioned, almost without twitching a muscle.
Absolutely. Sudhi, there are, I was just reading a few days ago, there are about 280 American companies with a market capitalization of $5 billion or more in the
Hmm.
private. In the
Hmm.
private,
Wow.
there is a company called Publix. It's a supermarket in the U.S. They have about
Hmm.
like in the southeast. There's about 1,500 stores here. They are private for the last 70 years, and their revenue is about 50 to 60 billion dollars,
Wow.
and they are worth about 150 or some billion dollars or something. Totally private, employee owned. No, for not
Wonderful.
public.
So,
Yeah.
which means, Ramesh, the way I understood this, as you probably just set the context, that it is also more in terms of the optics, which brings me to this. We call companies like OpenAI and SpaceX civilization scale. We are talking about, global satellites, massive compute, defense technology. So, is this the deciding factor, Ramesh? Do the capital requirements simply exceed what private markets can sustainably provide? Is it purely because of the ecosystem that they're catering to?
I think it could be two things. One is, of course, the tremendous capital needed if they have to go to the infrastructure, like the data centers on space down the road, and the
Right.
massive data centers that they are putting around. That could be one reason. The second thing is probably branding tool, and the founders and the other investors, initial investors, they want their money back.
Hmm.
Like
Hmm.
money back in the sense their investors might want to make use of that the increase in valuation
Hmm.
per se. So
Hmm.
it could be both the things. I don't think it is entirely due to infrastructure. It could be part of it, but it need not be because the private capital, as I said, is about 24 to 28 trillion dollars. Therefore, it can supply a lot of companies with private capital, which doesn't need like Stripe or SpaceX to go public.
Okay.
Yeah.
Okay. Okay. Which brings me to the $1 trillion question then, Ramesh, which is that, as I had mentioned, right, that it aspires to actually swell up to $1 trillion valuation or $1 trillion economy is what they're probably talking about. So SpaceX, OpenAI, Anthropic, Databricks all hit market in this 12 to 18 month window. We are looking at nearly $3 trillion in potential new market cap. So, first point is how transformative is a cycle that big, Ramesh? Aren't we just talking about tech stocks? How does this reshape ETFs, for example, the indices and institutional portfolios globally?
Absolutely, Sudeep, because your S&P 500 might change the indices. Because if you're talking about SpaceX, 1.5 trillion or even 1 trillion, if you're talking about 850 to a trillion of OpenAI and about 500 billion of Anthropic, there are a lot of indices that will change. Be it the S&P 500, be it the ETF, BTFs, be it the other indexes. Yeah, it can. It will have a ramification, but that is not the big thing here. The big thing is that it will bring so much capital into the public market. Remember, Sudhi, already US is already 70% of the global equity market. 70%. Therefore,
That's
when
huge.
these go, like even Indian investors, like you see, going to Gift City in Ahmedabad, can invest in OpenAI and in Anthropic and in SpaceX and all these companies. And remember, the all lot of funds will be flowing into these into the market, which like a Gift City in India, you can do it right away, right now, which the government allows it, with the
Right.
least taxation, with no bureaucratic things. For a lot of people, they want to, because remember, we don't have, I'm talking about in the Indian market, there is no AI player right now. Therefore, people are waiting for these type of companies to invest. And
Fair.
I think that is going to be the big factor here, I would say, across the world. I'm talking about the Japanese
Sure,
investor,
sure.
The Singaporean investor, the Dubai investor, like that.
Fair point. Of course, Ramesh, as we all understand this, and who better to explain it to us than you? Uh, with that kind of scale, there is always a tendency for scrutiny, because we are talking about deep tech, right? So research and development cycles actually needed for deep tech are long gestation periods. So do you believe the public markets of 2026 are finally mature enough to correctly price these very complex deep tech businesses?
I think there may be some hype. I feel I don't know whether, especially like companies like OpenAI, so high valuation, will they ever? The PE will be so high. It will be like the Cisco of 2000, like which is like
Oh, wow.
250, 280. Remember, Nvidia looks high, but actually its PE is not that bad. It's about 26 to 28. It's not that bad. But whereas like Palantir, an AI company, a
Right.
software company, the PEs are almost hitting 250, 270 or something like that. Therefore, there is a possibility that OpenAI might have a high PE, and I don't know whether it is, will they ever justify that? Like Tesla, for example, is very high PE. It doesn't. Now people say, okay, it has got these Optimus robots coming and driverless
Right.
and all that stuff. But
Right.
still, the P is almost 300. Is
Wow.
almost 300. So I feel among three, I feel the riskiest. I feel is the OpenAI, because
Okay.
Anthropic has got a good enterprise clients. They are very strong at enterprise. They are making money, and they probably make money faster than and earlier than OpenAI. Um, but OpenAI is more a consumer product. Therefore, I don't know how much how their revenues and operating margins would be with the amount of infrastructure that they are spending. So, I feel personally that OpenAI is probably the riskiest of the three, followed by SpaceX. Yeah, that is what I feel.
Interestingly, you just mentioned that, Ramesh. Very quickly, I'll just tell you that we've done a story on OpenAI and how OpenAI is getting into healthcare and the classrooms in a big way to justify their overall sales, because of the sheer amount of debt that people like Oracle and SoftBank have also taken, and also themselves. to maybe justify that if they can hit the sales perspective. So yeah, maybe you got a point there. Anyway, now of course let's look at the other side of the coin. Ripple raised $500 million, Ramesh, privately, as you were mentioning, and sits at a $40 billion valuation without touching the public markets at all.
Yes,
So what does this
yes.
tell us about the depth of private capital? I'd like for you to maybe shed light on it. I know already you have mentioned it, that it is a very robust ecosystem. But is liquidity, a new strategic tool that we can toggle rather than probably a necessity? Is that what it's signaling to?
Yes, but I think, see, Ripple is a fintech company, and the evaluation is 40 billion. Like Stripe is even higher, um, but their requirements of liquidation, they don't have to go public, in my opinion, because they don't need the same amount of capital, like let's say SpaceX, for example. Um, because there is no really hard infrastructure that Ripple or Stripe, that makes them to go really public. Therefore, but still the evaluations is astronomical. Ripple and Stripe is even more, and therefore, yeah, I think the liquidity is a factor for the big companies like SpaceX and all that, because they need a lot of capital. Second, the existing employees of SpaceX for the last 10, 15 years and the initial investors, they may want to, get back their returns. Therefore, you can go into the second. Oh, by the way, they don't. All these companies don't have to go to the primary market. They can still go into the secondary market and have liquidity.
Sure.
That means basically the employees can still sell the shares and make and trade it, just like public supermarket does, and all these in the secondary market. Even Ripple also. Okay, for no, not necessarily they have to go for IPO. The only reason I feel they go for IPO is for brand value. If they are expanding across countries,
Right.
because then you have a brand. Let's say someone wants, Ripple wants to go into India and South Asia
Sure.
or Europe. Therefore, IPO will lead to a brand value which will make them to go, rather than the necessity to raise capital, I feel. You know.
Very valid point. Of course, now if we were to kind of move towards the conclusion of the discussion, Ramesh, I have to say this, that do you believe that this isn't just a United States story anymore? We are actually seeing IPO candidates from everywhere. Minimax and Zippo in China, Celonis and Helsing in Europe, Databricks and Canva. So is 2026 the first truly global tech IPO year? That's one. And what is what is driving this convergence across, well, let's say so many borders all at once?
It is true. The last year, actually, the biggest stock market gains were in Europe and in East Asia. Okay, it's Korea, China, Indonesia, and all on the East Asia, and in Europe. Europe is now almost getting a third of the private capital, and there are also a lot of companies are going IPO. China is also coming back, of course, after 5, 10 years of sluggishness. Before it's not like India. I felt, I mean, last year we didn't, our stock market didn't do well. It's a hardly 2 to 3%, and it started off this year again in a negative way. Right now, it's about the -2%. I think Nifty and all that right now. But there are a lot of Indian companies, the startups that are coming.
Yes.
But we don't want. One thing is the public have to be careful, the retail, because you don't want like a Paytm type, heavy, high valuation, and then ultimately the retail investors got burnt,
Right.
because
Right.
for we have to be careful on how these valuations are. Really, are these companies really worth what the market capitalization is? For a
I
lot
guess
of things
that
are there.
should be the narrative across the globe, don't you not think so? I mean,
Absolutely,
as you
absolutely.
mentioned about Nvidia, to be honest, or sorry, you mentioned about OpenAI earlier. So I guess that should be something which should be as part of the overall sense of being, informed and measured in decision making before taking this step.
Absolutely, and OpenAI is the biggest dark horse I feel because its valuation is so high. I don't know whether they will ever get the returns. Even if they go to $100 billion revenue return rate of return in a couple of years. Right now, they're at about $50-60 billion annual revenue rate. Even if they go to 100 billion, can they really give back the returns? Therefore, ROI for OpenAI is questionable. And like that, I am not familiar with the European and East Asian companies. I'm only familiar with the US and Indian companies. And we both here in both these sectors, the retail investors have to be a little, cautious about investing. For example, Tesla is still quite high. If someone, I wouldn't want to touch Tesla today at this rate right now.
Despite the Optimus announcement and all that.
The Optimus is there, but the Optimus is, Boston Dynamics. There are many companies, Agility Robotics, Boston Dynamics. Many companies are showing up. Therefore, it's not. I don't know whether, but does it deserve a 400 PE? That's the question.
Okay.
Yeah, it may deserve a 50 PE or a 60 PE, but not a 400 PE, in my opinion.
And that's an important question to have asked everyone. In conclusion, Ramesh, I'd like to check with you as we wrap this up. If public markets are for funding civilization scale infrastructure, we're talking about $3 trillion, and of course the private markets are for funding scaled innovation, which of course you don't fully agree with because you believe that ecosystem is definitely quite strong at the moment. So are we essentially watching a new division of labor emerge between, for example, public and private capital? How would you like to wrap it up?
When you say division of labor, can you explain to me a little bit? When I didn't get that point.
No, basically, I'll just hark back to what I was trying to say. What I meant to say was, are we essentially watching a new division emerge between public and private capital?
Yeah, absolutely, absolutely. I think there will be a lot of private companies that will still be in private. There will be some public companies, some companies that will go public for two reasons, mainly for branding, global branding, and for heavy infrastructure like SpaceX and all that, and OpenAI and all that. But otherwise, I feel the private capital will be very strong. Number one, you are not. I'm talking about from the US point.
That's your prediction for 2026? Is that what you're
There
saying?
will be, yeah, but there will be, yes. I don't think there will be a growth in the IPOs in 2026, but because of the current administration's policies of less regulation, but still you are governed by the SOX, like the Sarbanes-Oxley Act. You are governed by a lot of regulatory thing that you have to disclose every quarter, every
Sure.
half yearly. So I don't think it will be like a big boom. It will be a constant growth, about 10 to 20% more IPOs this year. But it won't be like private capital will still be ruling, I feel, because it won't be a complete shift from private, and private capital will still grow because a lot of people and as I said, a lot of pension funds across the world are also putting into this, funding the private capital.
Fair enough. Well, Ramesh, thank you as always. It's been a true pleasure. And every time you join us on Front Page, you definitely give us some very interesting aspects to chew on and absorb on and think about. And of course, then we bring you back again because, well, we've run out of whatever you had enthralled us the previous time. So, well, we're looking forward to our next conversation. But till then, as always, we thank you from Front Page. Ladies and gentlemen, there you have it. Ramesh put it across, well, very simply. He said that, well, private capital is bold, it's strong, and it is going to continue to grow in the year 2026. IPOs are going to grow 10 to 20%, but a lot of it also he mentioned was, well, brand building. Maybe it's optics. Maybe it has those factors. And then finally, I believe the one thing that Ramesh believes that we need to follow, not just in India, but globally, is to be very, very well informed and understand things fairly deeply before we go ahead and invest. But all you need to do is for sure keep investing in, yes, front page on the AIM network by liking, sharing, and subscribing. And as always, I will leave you with this gem of a thought. Think AI, think AIM.